Hi, welcome back to my Charles Schwab portfolio. Thank you all for the support on the show. Please subscribe. If you could like this video, that would be great. I appreciate all of your input. If you would like to see certain topics on the show, please let me know in comments below, or you can send me a message on Twitter. I want to bring you content you want to see. Keep the video suggestions coming. Today, I want to talk about the best international stocks in 2019. I believe that will be the best place to find opportunities for investing. China is a good place to start. That's because not all Chinese companies rely on exports to the United States for revenue. With the US and China war is a two-sword edge. It will hurt Chinese manufacturers that sell goods to America, but it will help companies that do most of their business in China. These Chinese economies is expected to grow by 6.2% in 2019, more than double the 2.5% growth rate projected for the United States. For China to grow its economy at that pace, it would spend heavily in two sectors, technology and commodities. Therefore, the best international stocks in 2019 will be technology and commodities that are focused in China. First one, I can't pronounce, but its symbol is, or the company is IQiyi. It is a spin-off of Baidu, which is Bibu. That's a Chinese leading online streaming platform. Baidu is an e-commerce giant dwarf, sales volume of Amazon and eBay combined. Pretty big, huh? And then BHP Group is a mining giant that the Chinese closely supply of the hardest assets it needs to grow. How do you determine what qualifies for the best international stocks for 2019? There are three criteria traits that will be determined which companies qualify as one of the best international stocks for 2019. First, a company must deliver the majority of its sales from China. That does not necessarily mean the company must be headquartered in China, although it most often the case is. Second, a company must be in either the technology or the commodity sector. That includes oil and gas, along with industry metals and other hard assets. Third, a company must be an industry leader that can grow its market share. The middle class population of China is growing rapidly, increasing by more than 30 million consumers per year over the past 15 years. Below, I will go into depth about the companies that I mentioned above. IQiyi. What is it? It's a spinoff of the internet search firm Baidu in 2017. IQiyi is China's leading online video streaming platform. The company is positioned to grow thanks to favorable market dynamics as measured by user time spent and average total monthly users in 2017. IQiyi is a number one. In the West, IQiyi is often described as Netflix as China. However, although both provide video content, their business models aren't quite the same. Unlike Netflix, IQiyi offers free content. Users who wish to have special privileges can pay for a VIP prescription. As of August 2018, IQiyi had 66 million paid subscribers. This figure includes a company record net additional of 13.5 million subscribers during the second quarter. This is an introduction of strong success in converting its free use base for more than 80 million paid subscribers. Pretty impressive. Why is this one of the best international stocks in 2019, you're asking? Among China's 1.4 billion people, about 40 million are millennials, which are ages from 20 to 40 years old. This group of consumers is highly affluent and spends the most money. The size of the group is larger than the entire U.S. population. They are also avid smartphone users and video consumers. Research shows that 95% of online videos are viewed on a mobile device. Additionally, video accounts for 22% of Chinese mobile users. This is up from 13% 2 years ago, a sign that Chinese consumers are watching less TV and opting for more on-demand content on their mobile device for PC. There are about 1.5 billion mobile subscribers in China, and the country surpassed 1 billion 4G subscribers this year. The more smartphone capables of faster video streaming there are in China, the larger portion addresses markets. Avidu Group Holdings. If you haven't heard of it, look it up. I will have the description below of their symbol. Avidu, 3 major online retail platforms account for more than 75% of online shopping in China. They are tobacco, business to consumer, and group buying. They easily dwarf the sale volume of Amazon and eBay combined, as the co-owner and founder Jack Ma. The company variously online marketplaces are interconnected. That combines the network effects wherever the greater number of users, the greater the volume created for other users. Millions of Chinese consumers automatically turn to tobacco and business to consumers as the first place to search for products and services. They are essential. Amazon and eBay on steroids with more room to grow. In 2016, Avidu acquired a control stake in the e-commerce company Lazada, Lazada. The latter focused on Southeast Asia, where online shopping has been less potential of retail sales, at 3% compared to 14% in China. We don't expect Avidu to challenge Amazon's dominance in the USA, and it still is unclear whether it might become a major player in Europe. But the odds are high that Avidu will become a major focus in China's backyard. Why is it one of the best international stocks in 2019? Avidu has relatively little exposure in U.S.-China trade tensions. The Trump administration tariffs won't hurt Avidu much because exports to the U.S. do not contribute a big part of its revenue. If U.S. goods become too expensive, China companies could switch to other suppliers, both domestic and international. Overall, the U.S. accounts for less than 10% of China's imports. A risk for the U.S. is that either after tariff issues are resolved, China could decide to sync with alternative suppliers. Given the size and the potential of the Chinese domestic market, many countries could be happier to take over from U.S. suppliers. It seems unlikely that Trump's tariffs will change Chinese consumer patterns enough to hurt Avidu in its meaningful ways. Avidu is finding new ways to engage these Chinese consumers and is increasingly changing everyday Chinese life. Long-term investors with this potential to ride out current uncertainties could be handsomely rewarded. Our last and final one is BHP Group. What is it? Is a China play in an Australia mining and energy company. BHP Group, formerly known as BHP Billiant Company, underwent a massive restructuring over the past 2 years to narrow its product and geographic focus. BHP Group generates revenue through 4 operating divisions: petroleum, copper, iron ore, and coal. Iron ore and copper account for roughly 2/3 of BHP's revenue, while petroleum and coal composed of remaining 1/3. Billiant sold off its energy assets to the U.S. along with smattering non-coal mining properties. The company used net proceeds from those sales to pay down debt. As a result, its operating income has more than tripled over the past 2 years. Why is it one of the best international stocks in 2019? China has made clear its intentions to move forward with its e-commerce growth plan in 2019, with or without the assistance of a U.S. Australian is China's closest suppliers of the type quality of hard assets it needs to grow. BHP shares price was stuck in a trading range during the past year, with oil and commodity prices declining. Now that it has sold its U.S. oil properties, BHP bottom line profitability should improve in 2019. In addition, the company will use $10.4 billion from the sales of U.S. energy assets to buy back stock and pay a special dividend in 2019. That amount is more than 8% of BHP's market value, and it's additional to a 5% regular dividend yield. Well, that is my wrap-up of the best international stocks to buy in 2019. If you're looking to make money regardless of geographic locations and regardless of the market ups and downs. Thank you very much for watching my video today. If you liked this video, please subscribe below and click on the bell to get notifications of my next video. Also, like and comment. Give me thumbs down as to why. I'm open to criticism. I'm not new to investing, but I try to learn better as I'm reading and understanding investments. Nothing that I say here is a grain of salt. I find these information online and I read articles that are portraying to what retails to business investing. And you shouldn't always read what everybody else says. It's never always the truth at one source to another. So make sure you do your due diligence before you start investing. And remember, when you invest, you are actually using real money. On that note, let me know what you think of this video today. Until my next video, I will see you later. Bye.